In this week's Stock Picks, we put the spotlight on three global giants: fintech leader New Holdings, cybersecurity powerhouse Palo Alto Networks, and pharmaceutical and biotechnology giant Pfizer. Joining us to unpack these counters is Louis Storm from Vega Asset Management with his expert analysis. Louis, thanks so much for your time today. And let's start with New Holdings, which is, of course, as I mentioned, they're a fintech player taking Latin America by storm, pun intended. Just your analysis on that pick and why you like it at the moment.
Yeah, thanks. Firstly, thanks for having me. It's good to be on the show again. Yeah, New Holdings, for South Africans that might not know the stock, it's very similar to a Capitec, but they use technology to get clients and onboard clients faster and more effectively. They keep their overheads quite low, and they're growing revenue at an incredible pace. They, just in the market that they are currently operating in, it's mostly Brazil and also Mexico. So to give you some figures there, 50% of Mexico is unbanked, and 85% of them don't have a formal loan facility. So you can see there's massive opportunity for a company like a new bank to explore the market there. So we see them as like an early stage Capitec, and we see exceptionally good results. We're forecasting good results into the future. We're forecasting earnings growth of around 30% for the next 3 years, which is quite impressive, seeing as they're only trading at around a P of around 25. So that gives you a PEG of less than 1. Return on equity is around 35% as well. So all in all, the company looks very impressive, very good. It's one of our growth stocks that we are currently looking at in the fund.
And the opportunity to scale still seems exciting on that front as well. Now, there's been optimism around New's share price. Is that on the back of the Brazilian banking license news? It just secured that license that it just secured. The share price is up also 50% year to date. And I'm wondering whether there's any more upside to that.
Yeah, well, as I mentioned, valuations still seem on the cheaper side. I mean, if you look at the PE ratio, obviously sitting around 25, it might seem expensive compared to the rest of the market. But if you also incorporate the earnings growth, which is in excess of 30% for the next 3 years, those valuations actually seem quite fair and actually leaning towards cheap. I think that the increase in share price just came from a drive towards emerging markets. More and more investors are looking towards emerging markets to get the share price growth. So no, we are very comfortable and look forward to the next couple of years with New Holdings.
All right, let's move over to your second pick, operating in the cybersecurity space, and that's Palo Alto. Companies like Palo are becoming more viable in this increasingly digital world, right?
That's correct. So a lot of people tend to just look at Microsoft and Alphabet when you talk about AI or Tesla or Nvidia, whatever the case might be. But as stuff is getting more automated and everything is getting moved into the cloud, all of the business data and company data is getting moved into the cloud. There's obviously a massive risk if they do get hacked. All of their data is out into the open and out into the world. So they will have to spend more and more on cybersecurity. And we think that Palo Alto is definitely a leader in most of the cybersecurity pillars that they might need.
Lou, I also noticed that Palo has been engaging in a lot of M&A activity, particularly doubling down on AI security. Talk to me about the group's acquisition trail and the value it brings.
Yeah, so I think it makes sense. If you look at a company like a Walmart or Best Buy, that sort of thing, they would like to work with one cybersecurity company that can provide a bunch of products. So you don't want 5 or 7 different service providers providing you with cybersecurity products. So Palo Alto, through these acquisitions, have basically built a one-stop shop. If you need any sort of cybersecurity products, you can basically go to them, and they are a leader in, I'd say, 80% of the pillars that you need for cybersecurity. So it creates a moat around it. You'd rather go to them than having 5 or 6 separate providers.
You know, I was also thinking, I was trying to Google it a minute ago, that big hack we had a few years ago, and I'm just thinking around the risk that comes with being a cybersecurity company, because the companies that are using your services really rely on you.
Yeah, that's very true. If you just think about autonomous cars as well, if they get hacked, I mean, it's chaos. So all of these developments, it's wonderful for efficiency, and it's a great time. But I mean, they do need to be. There's a massive need for proper cybersecurity. It has to be safe. It can't be hacked. So the leader, or let's just say the leader in this space should do very well, and we think currently that leader is Palo Alto.
All right, let's move over to your last pick, that being Pfizer. Now, pharma stocks have been, on the back foot for quite some time, especially with, the tariffs in play. This, however, has somewhat subsided, Louis, and we've seen some interest here on the back of those AI concerns. I guess Pfizer is one of your defensive plays.
Yeah, it's call it one of the more defensive ones. Sort of a hedging strategy. If the AI play, it could be quite volatile. The healthcare play sort of lagged performance-wise over the last couple of years. If you take out Lilly out of that equation, so we feel that especially Pfizer, valuations are so depressed. We don't see it falling further or much further. If you focus on the valuations, it's trading on a dividend yield of around 7%. It's quite excessive for a US stock to have a dividend yield of 7%. The PE ratio is also around 8. So it's very cheap. It's not really pricing in much positivity for the future. It's currently sitting with a possible M&A deal, Metsera, which they've got some of those GLP-1 products coming into the market, or possibly coming into the market. So if the deal does go over the line, it could be very positive for the Pfizer share price. But even without that deal, we still feel that it's very cheap, and it could be a sort of a cash cow for portfolios.
Yeah, and before I get to your analysis around that potential Metsera acquisition, I just want to go back to Palo Alto quickly. Just your thoughts around, well, I found it quite interesting that from the AI tech companies, that Palo Alto is your AI pick. I mean, no one really looks at the likes of a cybersecurity. It's like when you think of chips, you think of NVIDIA, but you don't even look at the memory chips. And yeah, I just wanted to make a comment around that.
Yeah, look, we do invest in Alphabet and Microsoft and other AI plays as well. But we feel the cybersecurity space is just as important. And I think it might go unnoticed a bit, but yeah, it's definitely very, very important. Almost like a Taiwan Semiconductor. Yeah, they're the only ones that can produce that certain chip. Even like, it doesn't really matter if it's NVIDIA or AMD or that has the design for the chip. It's only the TSM fabrication that can actually make the chip. So it's sort of the same thing.
All right, so let's go back to Pfizer and that potential Metsera deal. Do you think, if that goes through, right, Pfizer will get a substantial piece of that pie, that market, considering the stronghold the likes of an Eli Lilly and Novo Nordisk have?
Currently, the demand is so massive that supply can't really keep up. So, yeah, there will definitely be a huge revenue spike if that does happen. They don't even need to be the best. I think it's just sort of a supply constraint at the moment. and they are setting in the US as well. So production happens in the US. They're also free from some of the tariffs that like a Novo needs to pay up. So margins will definitely be a bit better, and I think demand is still very strong. So that's not a major issue at the moment. Pfizer also has the size. Pfizer is a massive company, so I think M&A and also their own research and development. So I don't think it would be too long before they're sitting with their own leading product.
What also makes Pfizer quite enticing for me, what I noticed is that it's enticing dividend, paying out or rather raising its dividend consecutively for the last 16 years, Louis. I'm sure you're happy when it comes to Pfizer.
Look, we only started investing in Pfizer very recently, but yeah, that's definitely something that enticed us to invest in the stock. It's got an extremely good dividend history, and its dividend yield is large. As I mentioned, 7% is quite big for a company like Pfizer.
And no concerns around drug pricing, especially I know that it is a local producer, or rather a producer within the US, but we do know that Donald Trump really does try and overregulate and reduce prices, increase prices, etc., etc.
Yeah, I think that's been mostly priced in.
Okay.
There's definitely some risk, but I think it's been priced in. If you just, as I mentioned, look at the valuations, I think it's definitely been priced in. Even with some of the competitors like a Lilly or a Novo, it's gone through some rough times due to the volatility of tariffs. What might the tariff be, or what's going to happen next? So I think that's mostly been priced into that share price. So I don't think there's too much. Obviously, there is a sort of a very negative scenario where we could see some decrease in price, but I think it's very fair at the moment.
All right, let's leave it there, Louis. Thanks so much for your time and sharing your insights with us.
Thank you.
That was Louis Storm from Vega Asset Management. And that's all for this week's segment, but do stay tuned for lots more coming up right here on Business Day TV.